We're going to talk just briefly about farm income in 2016, and there's obviously some important changes that are coming about. First of those is to go back just a little ways and recognize that we've had some very good farm incomes, and in fact, record high farm incomes from 2011 to calendar year 2014. Now, during that 4 year period, we obviously had ups and downs in farm income, but the average was about $105 billion as estimated by USDA. And as we look at USDA's estimate for 2015, they've dramatically reduced that farm income estimate to about 56 billion. So going from an average annual income of about 105 billion down to 56 billion, that's approaching a 50% drop in farm incomes for farm families. So this clearly is going to have and is having a major impact on the behavior and the way that the farm families do spend the income that they do have from the farm. Now, again, not hard to find reasons for why that farm income is really collapsed. First of those is clearly the great reduction in grain prices that we've seen. But since 2014, we've been building inventories in terms of the animal numbers, and that has really had prices go down sharply as well. I think a third factor we can talk about is the value of the US dollar is so strong, it is really hurting our exports, both in the grain sector as well as the animal sector. You put all that together, we really have depressed farm income. That will change what farmers buy and what they can do in terms of technology and even their lifestyle and lifestyle expenditures. So as we go into 2016, USDA doesn't make that estimate yet, but I think what we can say is we can continue to see pressure on margins for the crop producers. We expect to see grain prices not a lot higher, with cost of production coming down some, so maybe margins improve a little bit for grain producers in 2016. On the other hand, on the animal side, we see continued generally lower prices for 2016, and what that suggests is that the margins will tighten up even a little bit more for the animal sector. So I think the important message is that we are in a substantially different time period. We went through a boom in agricultural incomes. We think we're really in a period of perhaps 2, 3, 4 years of great moderation in those incomes. So what that tells farm families is they probably need to adjust, and the sooner they start to adjust their spending and consumption patterns, the better that will be. The great opportunity is that I think after we get through perhaps 2, 3 years of tight incomes, then overall world demand prospects probably are positive, and U.S. farm income will recover somewhat, but maybe not to the levels of those 4 years from 2011 to 2014.